Hello everyone, good morning to all. So welcome to Halson Academy. So this video is about MCQ session, guys. So completely MCQs. Okay. So let us start. I don't want to waste your time. Okay. Just spend your 45 minutes of a time with 2 speed. Okay. Then easily you can complete this MCQ session. Okay. So let us start, guys. First MCQ. So in this MCQ session, I'm going to discuss not only MCQs, guys. Sometimes I want to discuss some concepts also. So I will remember few things. You need to revise that. Okay. So that's why this video is very important. Ready? Yeah? Let's start. Okay. So simple, guys. Ind AS introduction. So this question may or may not come in exam. Not that much important, but still we are going to discuss. So I think. Can you please tell me the limits, guys? So Ind AS applicable from 1/4/2016, right? Initially, net worth should be 500 crores or more, both in case of a listed as well as unlisted. Correct? From 1/4/2017, sorry, yeah, from 1/4/17. So Ind AS applicable to listed entities irrespective of the limit, which means even if it is less than the 500 crores, net worth is less than 500 crores, still Ind AS will be applicable. But in case of unlisted entities, net worth should be 250 crores or more. 250, exact 250 also applicable, guys. Okay, so please don't forget that. Same scenario, it will be repeated in NBFC also. Okay, so see here, the net worth is 250 crores or more. So then Ind AS will be applicable from 1/4/2017. Okay, now clear, guys. So in this question, nothing is mentioned. So assume that it's a unlisted. Assume that it's an unlisted. Okay, so Ind AS applicable to NBFCs from 1/4/2018. Correct? 1/4/16, 17, 18, 19. 18, 19 is related to NBFCs only. Correct? Yes. So I don't want to discuss all that. Next point number 3. This is related to Ind AS 34, guys, but I have included here only. Okay. See, a company's net profit 7,20,000 for the third quarter of the year 2018-19 after incorporating the following. What are the things, guys? Bad debts of rupees 40,000 incurred during the quarter. 50% of the bad debts have been deferred to next year. So see, simple, boys, simple, guys. What is the net profit here? 7,20,000. Yeah, I want to discuss one more point. Ind AS not applicable to RRBs and UCBs, regional rural banks, urban cooperative banks, and SMEs also. Okay, SMEs also, Ind AS not applicable. Yes, okay. So come here. So net profit 7,20,000. Bad debts is actual bad debts incurred in this quarter is 40,000. You need to recognize 40,000 expense as an expense, but you deferred 50% to next year because of that deferred payment. Net profit for this quarter will get increased or decreased. Increased or decreased, guys? Decreased, because out of 40,000, you have recognized 20,000 in this current quarter. Correct or not? But you need to recognize 40,000. So because of deferring the payment of bad debts, so net profit will get reduced or increased. Sorry, increased. Correct or not? So now we need to adjust that. So what we need to do, sir? 20,000 should be minus, because of that 20,000 profit will get increased. So that's why I'm reducing right now, because any expense incurred in any quarter, you need to recognize in that quarter only, as per Ind AS 34, interim financial reporting. Next, extraordinary loss of rupees 35,000 incurred during the quarter has been fully recognized in that quarter. So is there an issue in that? No issue. So then what is the answer should be? 7 lakhs. Correct? Yes, option B is the correct answer. So this is correct only. No need to do any adjustment, guys. Please don't do any adjustment. Clear or not? Yes. Okay. So next, coming to Ind AS 8. Accounting policies, accounting estimates. Okay, just wait. Okay, Ind AS dash will be applied in selecting and applying accounting policies and accounting for selection of changes in accounting policies, change in accounting estimates, and correction of prior period errors. So everyone knows about it. Ind AS 8. I don't want to discuss that bloody stuff. Okay, change in accounting estimates result from anybody? Since it is defined in Ind AS 8 only, so you can go and check there the definition of change in accounting estimate. So it will be arised from new information, new development, but those are not correction of errors. Those are not correction of errors, guys. So all of these, yes. See, assume that, suppose example, provision for bad debts is there. That is, provision means completely based on estimation only. So our estimation sometimes may get changes, but it is not a correction of error. Correct or not? Yes, that's right. Simple. Next, Pay Limited changes its method of valuation of inventories from weighted average to FIFO method. The accountant opines that the Ind AS is applicable. Pay should account for this change as. Can you please tell me? Method of inventory. It's an accounting policy or accounting estimate? Accounting policy. Method of depreciation, accounting estimate. Change in useful life, accounting estimate. Correct or not? Yes. Valuation of investments, accounting policy. Okay. So that's why it's a change in accounting policy. So again, please remember, guys, if it is accounting policy, change should be applied retrospectively. If it is accounting estimate, change should be applied prospectively. Prospectively means from the date of change. Retrospective means from the beginning of the business. Correct? Yes. Next, coming to Ind AS 12, guys. 12. So please remember the few examples for accounting policy and accounting estimates. Next, tax depreciation is accelerated. Tax depreciation higher than accounting depreciation. So I want to discuss few things for regarding Ind AS 12. Guys, basically in case of Ind AS 12, nothing but income taxes, right? Okay, income taxes. So basically income profit as per accounting and profit as per income tax sometimes may be different. So because of that, some differences will come. Yes or no? So that's why this deferred tax concept will comes into picture. Correct or not? Yes. So the difference are divided into two types, basically temporary, other than temporary. In case of a temporary, again two types: taxable temporary differences, deductible temporary differences. If it is taxable temporary differences, a DTL will be created, deferred tax liability. Next, deductible temporary difference means it is nothing but deferred tax asset will be created. Why deferred tax liability and deferred tax asset, guys? Deferred tax asset will be created because if you if you pay now, then you can save later. So we can simply use one word: pay now, save later. Here, if you want to save now, you need to pay later. If you want to so once you want to pay after that, so we can say it's a liability, right? You need to pay later. That's nothing but liability. So that's why deferred tax liability will be created. So additional taxable in future. Okay, if additional taxable in future, then we can say it's a taxable temporary differences, deferred tax liability will be created. So benefit from tax amount in future. That means you are paying extra amount today only. You are paying total extra amount today only. So then you will get a deduction benefit in future. That's why DTA will be created, deferred tax asset. Clear? So basically, as per accounting standard 22, basically income approach will be followed, but as per Ind AS 12, we are following the balance sheet approach. Okay, for creating deferred tax asset and liability. Next, other than temporary, nothing but permanent differences, we can say that. So in case of a permanent differences, there is no deferred tax, guys. There is no deferred tax. Understood or not? See, example, donation to unregistered trust. Okay, then there is no deduction will be given, right? Simple, guys. Suppose example, if one expense incurred, it is allowed in accounting as well as income tax, then only we will get this deferred tax concept. Otherwise, it will not involve. Okay, nothing but suppose example, if any expense is not allowed as per income tax, then it is a permanent difference. We are not getting in future, right? We are not getting in future. So that's why it's a permanent difference. In case of a permanent difference, there is no deferred tax concept will comes into picture. Okay, tax expense equal to current tax plus deferred tax, guys. Current tax plus deferred tax. These are the steps for calculating deferred tax liability or deferred tax asset, whatever. So first of all, you need to calculate the carrying amount. Second, you need to calculate the tax base. Third, calculate the difference and apply the tax rate on that difference. That's it. Carrying amount means as per accounting. Tax base means as per Income Tax Act. That's it. Okay, so these are the conditions, guys. Please remember for examination point of view. Otherwise, you can please note down also, no issue. Yeah, if in case of underlying asset, the base is asset. In that case, suppose example PP asset is there. Okay, so the carrying value is more than tax base, then DTL will be created. Okay, if the carrying value is less than tax base, then DTA will be created. Okay, next, if the next in case of a liability, if the carrying value is more than tax base, then DTA will be created. If the carrying value is less than tax base, then DTL will be created. Okay, this is a simple logic, just you need to remember. Okay, please remember this, guys, then easily you can answer. Okay, so in previously, as per accounting standard 22, we will discuss this deferred tax concept as per income approach based on profit, correct or not? So but in this case you need to calculate as per balance sheet approach, which means carrying amount is very, very important here. That's it. Okay, see guys, next one more point. If the deferred tax asset is 50,000, if deferred tax liability is 30,000, so then the difference amount is how much? Net amount is how much? Net DTA, because DTA amount is higher than DTL, right? So 20,000 is the deferred tax asset. So in balance sheet you need to show net amount only, either it may be DTL or DTA, whatever. Okay, so next, just for PP I'm giving a small example. Cost of the asset is 100 rupees. Okay, cost of the asset is 100 rupees. Depreciation as per accounting is 20. Depreciation as per tax base is 30, income tax. So then the carrying amount is 80 and 70. Okay, what is the difference here? Difference how much? 10. Okay, if the carrying amount is more than tax base, then deferred tax liability will be created, correct? Please apply this rule. That's it. Okay, next, coming to liability. So for example, carrying amount equal to 100, tax base equal to 0, then the difference is 100 only. 100 into 25%, 25 only, correct? So now you can go to Ind AS 12. Yeah, so here tax depreciation is higher than accounting depreciation, which means which carrying amount will be higher, guys? Which carrying amount will be higher? Please tell me. Depreciation is higher than accounting depreciation. Tax depreciation is higher. Suppose example, cost of the asset is 100. Tax depreciation, suppose example, higher, right? So 30. Assume it is 20. Then 80, 70. So carrying amount of the asset is more than tax base, then DTL will be created. That's it. Otherwise you can think like this only, but as per Ind AS 12 it was not encouraging. Like suppose example, as per tax, depreciation is more, right? Depreciation is more means profit will get less. Okay, but as per accounting, profit will be higher because we are charging lesser depreciation, correct? Yes. So which means this is tax, this is accounting. As per tax, higher depreciation means profit will be low. Okay, suppose example 100 minus 30. How much? Suppose example total net profit is 70,000. Okay, this is the net profit. Assume that here 80,000 is the net profit. Which profit is more, guys? Accounting profit is more. So we need to pay as per accounting only, but we are paying as per Income Tax Act. So we are paying less amount than accounting or more amount, less amount, which means we need to pay later. So you are saving now, so we need to pay later, which means deferred tax liability will be created. So save now, pay later. We are saving 10 rupees, so we need to pay later. That's why deferred tax liability will be created. It is as per accounting standard 22. So please don't think like this, but still answer will be same. That's it. An entity recognizes a liability 100 rupees for gratuity and living encashment expenses by creating a provision. It's a liability. Okay, so for a tax purpose, such amount will not be deductible until the entity pays the same. Tax rate is 25%. The entity should. Can you please tell me, anyone? It's a liability. Okay, the carrying amount of the liability, how much? Sorry. Okay, so carrying amount of the liability will be 100, correct? Carrying amount of liability will be 100. Next, as per tax base, is there any liability we have? Nothing liability will be there, so that is nothing but tax base will be 0. Then difference will be 100. 100 into 25%, 25. Here, in case of a liability, if the carrying amount is more than tax base, then deferred tax asset will be created. So DTA 25, recognize that. That's it. Simple guys. ABC reports quarterly and in the quarter ended, it earned a pre-tax profit 3 crores, but it expects incur 1 crore loss each of the 3 remaining quarters in the financial year. The tax rate on income is 30%. The management believes that since the company has zero income for the financial year 23-24, its income tax expenses for the year will be zero. Calculate the amount of tax expenses to be reported in the first and fourth quarter. This is a past exam question, guys. This is the past examination question. Very simple, guys. So please note down the profit. First year 3 crores profit, right? First quarter 3 crores profit. Next remaining 3 quarters 1 crore, 1 crore, 1 crore loss. Correct? What is the tax rate? 30%. Just apply the 30% on all the quarter amount. How much? 90 lakhs, 30 lakhs, 30 lakhs. Sorry, 1 crore into 30%. Yes, 30 lakhs, 30 lakhs, 30 lakhs. Yes, the question is asking about calculate the amount of tax expense to be reported in the first and fourth quarter. First quarter is 90 lakhs, fourth quarter is 30 lakhs. That's it. Simply we need to calculate the tax as per quarter only. That's it. Nothing to worry. So that's why answer is C. Okay, next one more, fourth one. From the given information, you are required to compute the deferred tax asset and the deferred tax liability for the CBDT 31st March 2023. Tax rate is 35%. Okay, the company has charged depreciation 7,42,900 in the books, while as per income tax computation, the depreciation available to the company is 8,65,400. Can you please tell me the difference, guys? 742,900 minus 865,400. How much? 121,600. Correct? 121,600. That is the difference. Okay, so can you please tell me the depreciation as per accounting is less than the tax base? Correct? The depreciation is as per income tax is less than the sorry guys, the depreciation as per accounting is less than the tax base, which means extra depreciation is charging in tax base. It is more than accounting, right? So which carrying amount will be more? Can you please tell me which carrying amount will be more? This is the tax, this is accounting. So the company charged depreciation 7,42,000 in its books of accounts, which means lesser depreciation. This here less depreciation, here more depreciation. Then the carrying amount of asset, which is more, guys, as per accounting or as per tax base? As per accounting is more carrying value, which means carrying value is more than tax base. Carrying value is more than tax base. So what will be created, guys? Deferred tax asset or deferred tax liability? If the carrying value is more than tax base, then deferred tax liability will be created. How much? The difference amount 121,600 into 35%. How much? 1 to 1. What is the difference? 865,400. Yeah, 42,875. Difference amount how much? 122,500. Sorry, 122,500 into 35%. 42875. So go to answer. So 428. So everything have 42875 only. So we need to calculate the deferred tax asset also. Yes. Okay. Coming to second point, the company made a provision for doubtful debts 54,300 during the year. Basically, provision as per income tax is not allowed, so completely, so it's a permanent difference, so no deferred tax will be created. Next, the company debited share issue expenses 6,23,500, which will be available for deduction of the income tax in from next year. So it is not allowing in current year, but it will be allowing in next year. Correct or not? Yes. So 623,500 into 35%. How much? Okay, so coming to point, sorry, basically share issue expenses will not be allowed as per income tax act. Correct? Yes. So just wait. Okay, guys. See one more. Just sorry for disturbance. One more point, please note down. If accounting expense is more than tax expense, deferred tax liability will be created. If accounting expense is less than tax expense, deferred tax asset will be created. I'm not discussing any logics as of now. Just please remember, that's it. Okay, clear. Please note down this point also. Yeah, sorry guys. Yeah, share issue expense is not allowed as per Income Tax Act. So tax expense is less than accounting expense, which means accounting expense is more than tax expense. So basically deferred tax liability will be created. Yes, how much? 6,23,500 into how much percentage? 35%. How much? 218,225. 218,225. Next, the expense 784,500 has been charged to P&L, of which disallowed under income tax. As per income tax, completely disallowed. So we can say it's a permanent difference only. Yes, there is no tax base. Correct or not? It's a permanent difference. Obviously, in case of a permanent difference, there is no deferred tax. Okay. So assume that there is no, it is not allowed in future also. Then only we can say it's a permanent difference other than temporary. So there is no deferred tax. So then answer will be DTA. How much? 218,225. Next, DTL 42,875. Sometimes in the given solution, they will give the net amount also. Please identify that. Okay, na? So please don't get confused, guys. Okay, this marathon, this MCQ session also will be helpful to solve few questions also. Okay, that's what the importance of MCQs. Next, coming to Ind AS 16, guys. The item of a property PP shall be recognized an asset only, and if these two conditions, yes. Okay. Cost, future economic benefit. See, they have given the, I think something is missed in the question. Okay, the dash of an asset. Okay, the dash of an asset of a PP shall be recognized as an asset. Which is, sir, what is that? The cost of an asset. Correct only. The cost of a item of PP shall be recognized as an asset if and only if it is probable that future economic conditions will be associated and flow to the entity, and cost should be measured reliably. Yes. So that's why dash, which means cost of the item should be measured reliably. So this is the recognition criteria for Ind AS 16, nothing but PP. Correct? Yes, this is the basic question, guys. Next, PP initially recognized at cost only. Obviously, everyone knows about it. Core Limited has a plant and machinery with a carrying amount of 1,20,000 on 1/4/2022. Useful life is 10 years, which remains 4 years remaining in the. On the date, the company decides to revalue the plant on 2 lakhs 1/4/2022 and recognize the revaluation reserve is 80,000. Calculate depreciation in the statement of P&L for 22-23. Simple, guys. So cost of the carrying amount of the asset is 1,20,000. Okay. On which date? 1/4/2022. So that is revalued at 2 lakhs. So difference amount, what is that? Revaluation reserve only. How much? 80,000. As of now, the asset should be depreciated at 2 lakhs only. Yes, on 2 lakhs only you need to calculate the depreciation. Yes. How many years remaining? 4 years remaining on the date. So 2 lakhs divided by 4. How much? 50,000. So 50,000 is the depreciation for 22-23. That's it. This is a basic question, guys. Next, 1/4/2019, Richard Limited purchased heavy duty equipment for 4 lakhs on the date of installation. It was estimated that the machine has useful life 10 years and the residual life is 40,000. Accordingly, the annual depreciation worked out to be 36,000. On 1/4/23, after 4 years of equipment, the company decided to review the useful life of the equipment and residual life. Technical experts was consulted. According to the remaining useful life of the equipment on 1/4/23 was 7 years and residual life is 46. Compute the revised annual depreciation for 23-24 and future years. See, guys, this is very simple point. Okay, just go through the question. I don't want to your wait. Okay, so come to solution, guys. Just I simplified the question. So initially the cost of the asset is 4 lakhs, life is 10 years, residual is 40,000. Okay, depreciation for each year will be 36,000. So after 4 years they have revised the useful life as well as the residual value also. So depreciation for 4 years is 1,44,000, 36,000 into 4. So 1,44,000. So after 4 years the carrying amount of the asset will be 4 lakhs minus depreciation, total depreciation. So 4 lakhs minus total depreciation, how much? So 4 lakhs minus 1,44,000, difference will be 2,56,000. Okay, so 2,56,000 is the carrying amount. Now the revised useful life is 7 years, residual value is 46,000. That is the question. So then you can calculate the depreciation easily. 2,56,000 minus 46,000 divided by 7, then how much? 2,10,000 divided by 7, how much? 30,000. That's it. 30,000 is depreciation from 5th year. So go to question. Yeah, option D. That's it. Next, Narmada Limited owns machinery which is carried in its balance sheet at the carrying amount of 15 million. The fair value of the machine is 22.5 million. It exchanges machinery for a building having a fair value is 30 million and pays additional cash 4.5. As per relevant Ind AS, the profit on exchange of machinery. Simple guys, simple. In case of a calculation of a profit of exchange of machinery, see, both the fair values is given. Both the fair value is given, right? So first of all, you need to take the fair value of asset given up only. What is the asset you are giving right now? Machinery. You have your own machinery, right? The fair value of the machinery is 22.5. 22.5. Correct? Yes. And additionally paying cash how much? So you can ignore the cash also. You can ignore and you can calculate the profit directly. So fair value is 25. Then the carrying amount of the asset is how much? 15 million. So carrying amount is 15. How much difference? 22.5 minus 15, how much? 17. Sorry, 22.5 minus 15, guys, 7.5, right? So 7.5 is the profit on exchange of machinery. Yes, that's it. Simple. Understood? Basically, when we are recognizing the fair value of the asset, asset, so we can include the cash amount also. If we include this 4.5, you need to reduce that 4.5 also. Okay, so that's why I'm not taking that cash amount, additional cash amount. You can directly calculate the profit. How much? 7.5 is the answer. That's it. The carrying value of the PP1 1st July 2023 is 15,780. Cost is 20,580 and accumulated depreciation 4,800. During the year 30th June, PP costing 4,530 was purchased. The depreciation policy changed at 20% on all assets held at the year end on diminishing balance basis. Accumulated depreciation for the balance sheet would be how much? So can you please try and tell me? Anyone? Okay, come to solution. See, in this question we have two assets, right? So carrying value of PP on 1st July 2023 was 15,780. So basically, please identify the in the question the year ending is 30th June, nothing but 1st July to 30th June. Okay, so please remember that. Next, the cost of the asset is 2,580, accumulated depreciation 4,800 on 1/7/23. So come to solution. 1/7/2023. Okay, asset 1, 2,580 minus depreciation how much? 4,800. So balance how much? 15,780. Okay, this is the carrying amount as of now. They're asking depreciation for 24-25, correct? So please go to question. They're asking depreciation on 30th June 25. They're asking 30th June 25. We are at 23. As of now, 23 only. So we need to calculate depreciation for 2 years more. Okay, this is the up-to-date depreciation. Please keep aside. Okay, as of now, the asset value is carrying amount is 15,780. So now the diminishing balance they are using 20% rate. So please calculate 15,780 into 20%. How much? 3156. This is for 23-24. Okay, in next year 24-25, what is the depreciation? 15,780 minus already 3,156 is reduced, right? So 15,780 minus 3,156 into 20%. How much? 12,624. Correct? Yes or no? Into 20%. Sorry, into 20%. 24.8. Next, on during 24-25 they have purchased one more asset. The cost of the asset how much, guys? How much? 4,530. So please calculate depreciation 4,530 into 20%. How much? 906. Please total this. How much? 6586.5. What is the question they're asking? They are asking the question accumulated depreciation for the balance sheet on 30th June 25. So they are asking total depreciation. This is the total depreciation till now. But previously we have already 4,800 depreciation, is there, right? So please add that 4,800 also. Total 11,386.8. This is the accumulated depreciation calculation. That's it. Simple. Very simple, guys. Next, Ind AS does not apply to which of the following. Basically, Ind AS 16 will not apply to biological assets except bearer plants. Okay. Yeah, option A. Next, assets in exploration for that also Ind AS 16 not applicable. And mineral rights and reserves, oils and natural gas, yes, Ind AS not applicable, 16 not applicable. So all of the above. That's it. This is Ind AS 16. Next, coming to Ind AS 116 leases, guys. So for this leases, this question as it is, I have discussed in my class, which is the marathon part 2. Okay, so go to marathon part 2. In that Ind AS 116, we have discussed one unearned finance income question. That is this one only. Okay, so please go and watch there. The answer will be the same. Next, coming to, so one more point I want to discuss. Gross investment in lease equal to what is the formula? Please tell me. In case of a lesser accounting, gross investment in lease equal to, can you please tell me? Lease payments plus GRV plus UGRV, correct? Lease payments plus GRV plus UGRV. Can you please tell me in this question what is the gross investment? Company takes machinery on lease for 6 years as lease rent 4 lakhs per annum. So 4 lakhs into 6, how much? 24 lakhs. With guaranteed and unguaranteed residual value is 3 lakhs. So total how much, guys? Total 27 lakhs. They're giving guaranteed and unguaranteed residual value is 3 lakhs. Total will be 3 lakhs only. So total 27 lakhs. That's it. Simple question now. Okay. So this is Ind AS 16, guys. Coming to Ind AS 21, dash are held for assets and liabilities to be received or paid in fixed or determinable, means monetary. Fixed amount unte monetary, yes, so monetary items, okay. In conglomerate merger, two companies into one company, the merging companies provide justification for your selection. So what is the points? In related markets have similar product lines, sir. Conglomerate means completely different, sir. There is no relationship. So unrelated markets have no functional economical relationship. In related markets, and merging companies are complementary to each other. So obviously easily we can find out conglomerate means different. That's it. Okay, next Utkarsh, okay, Limited declared the following information. So purchase goods on 12/3/2022 for US dollars 1 lakh. So this is the USD rate, USD. This is the year ending rate. This is payment rate, correct? This is purchase rate, this is year ending rate, this is payment rate. What will the gain or loss in the books? 21/22. Current year they're asking, correct? See, guys, 78.6 initially it is a payment or receipt first of all. Purchase means payment. So from 78.6 to 79 increased or decreased? How much increased, guys? 79 minus 78.6, 0.4 increased. Loss or benefit? When you are paying, so the exchange rate increases, you need to pay more, so it's a loss. So 0.4 into 1 lakh, how much? 40,000 loss in previous year. So next year on the date of payment again 0.5 increase, so 0.5 into 1 lakh, how much? 50,000 again loss. Okay, they're asking question 21/22, not 22/23, correct? You're paying on 22/23, right? Not on 21/22. So that's why they're asking the gain or loss on 21/22 only. So how much? 40,000 only. So that is the loss. That's it. Basic simple question, guys. Jet Limited. Sir, J Limited purchased a plant US $50,000 on 31st March. Payable after 6 months. The company entered into a forward contract 6 months, $64.5. On 31st October 2020, the exchange rate was $61.5. The profit or loss forward contract for the year ended 31st March 2021 is dash. They're asking 31st March 2021. As of now, we are at 31st October 2020. Okay, after 6 months, the company entered into forward contract for 6 months. Okay, see, guys, today I am purchasing on 31st October. Okay, I will pay after 6 months only. For that purpose, the company entered into forward contract for 6 months. How much, at which price? 64.25. So on 31st October, the exchange rate was $61.5 only. per dollar 61.5. Now it is increased. How much? 64.25 minus 61.5. How much? 2.75 into 50,000. How much? Total 1,37,500. Okay. So how much? Answer? Same answer. 64.25 minus calculation. 64.25 minus 61.5 into 50,000. That's it. Okay. Next. Paytal Limited declares the following information. Same question, guys. I don't want to discuss this question here. Okay. Next, Ind AS 23. So borrowing cost directly attributable to qualifying asset should be capitalized as a part of the cost of the asset. So acquisition, construction, production, yes, all of these. Yes or no? Yes. Unlimited purchase the ship during the year on deferred payment basis payable over next 10 years. The ship is qualifying as per Ind AS 23, not qualifying as per 23, qualifying as per Ind AS 29, and not qualifying as per Ind AS 29. Ind AS 29 is there or not? So there is no Ind AS 29 for us. Only Ind AS 23 is the borrowing cost. Correct? See, here the purchase the ship during the year and deferred payments basis payable over next 10 years. Sir, purchasing ship directly, they are purchasing ship, it is not manufacturing, so directly it is available, there is no substantial period of time, so that is not a qualifying asset. Simple question, huh? Okay. Next, coming to exchange rate, guys. So for this purpose I'll discuss foreign exchange. Simple, guys. In this concept I will show you the steps. Yeah, this is the theory, guys. So exchange difference arising from foreign currency. Simple, guys. This is the concept. First of all, if you got exchange loss in the given question, if you got exchange loss, how the treatment will be? See here. First of all, these are the steps, guys. These are the steps. Step number 1. Suppose example, this is the question. I will discuss this example, then you will get easily understand. So I borrow a loan from a foreign bank from US, $1,000 at the rate of 4%. Basically, generally we are getting a loan from outside, I mean abroad, or outside the India. I think what, suppose example, foreign countries, the interest rate will be low. Basically in India, interest rate will be more. Okay, that's why they got a loan from US. Okay, so on the date of taking the loan, the dollar value is 40 rupees on 1/4/2022. Okay, if you take a loan from India, the interest rate is 12%. Okay, clear. Next, 31st March 2023, year ending, the dollar value is 50 rupees. These are the given information. Okay, so basically as per this stand, I don't want to discuss all the things here, just some portion of the exchange loss, some portion is traded as per Ind AS 23 borrowing cost, and some portion is traded as Ind AS 21 exchange loss. Okay, which means 21, 23 both standards will be included in this concept. Okay, see, step number 1, you need to calculate like this only. First of all, please calculate interest on loan in foreign currency. You have taken loan from foreign bank only, right? So please calculate interest in foreign currency. So how much? 1000 into 4% into how much? 1000 into 4% into how much? 1000 into 4% how much? 40, yeah? Yes, $40 into we want in rupees, right? So in case of a calculation of interest, on which date you need to pay interest? Basically year ending only. So on that date only you need to calculate the interest. So the exchange rate value, how much? $1 equal to 50 rupees on year ending, correct or not? Yes. So you need to pay interest 50 rupees per dollar. So how much? 40 into 50, 2000. So this is the interest as per foreign currency. Suppose example, if you take a loan from India, what should be the interest? You can calculate easily directly. How much? So $1,000 into how much on the date of taking the loan? 40 rupees. So 1000 into 40. 1000 into 40, how much? 40,000. 40,000 into interest rate is 12%. How much, guys? 4,800. Correct? This should be the interest. If you take a loan from India, interest amount is 4,800. Correct or not? So please don't get confused, guys. When you're calculating interest in foreign currency, then only you need to take the year ending value, dollar rate. But if you take loan today, so the value is for you will take 40,000, you need to pay interest on 40,000 only. Correct or not? Yes. Interest is 12%. So 4,800. So there are just 2 steps. Step number 3. What should be the exchange loss? Please calculate. Exchange loss, how much? See here 40, here 50, right? So 10 rupees is increasing. It's a loan, you need to pay. So liability will get increased at 10 rupees. So $1,000 into 10 rupees, how much? 10,000. So 1,000 into 10 rupees, 10,000. That is the exchange loss. Out of this exchange loss, some part should be the Ind AS 23 treatment, some part should be Ind AS 21. What should be the treatment as per Ind AS 23? Which means, simple guys, difference between the Indian currency interest and foreign currency interest, that's it. So Indian currency interest is how much? 4,800. Foreign currency interest how much? 2,000. So then the difference will be 2,800. That should be as per Ind AS 23. Here already 2,000 is, it is also interest, right? You need to pay interest 2,000 only, right? This is also as per Ind AS 23 only. This is 23 and this one also 23. So total interest to be capitalized as per Ind AS 23 is how much? 2,000 plus 2,800. Total 4,800 only. If the question is asking about what should be the total borrowing cost as per Ind AS 23, which means 2,000 plus 2,800, not only 2,800, not only 2,000, both should be included. So because this should be as per Ind AS 23 only, as well as this also needs to be included. How much? 2,000 plus 2,800, 4,800, that's it. Next, they're asking treatment as per Ind AS 21. How much, guys? Simple, the balance amount. Out of 10,000, 2,800 is treated as 23. So then the balance will be treated as 21. That's it. How much? 10,000 minus 2,800, 7,200 should be charged to P&L as per Ind AS 21. That's it. This is the concept, guys. Simple example. Total capitalized amount, how much? 4,800. Total interest to be capitalized, how much? 4,800. This is the question. Okay, so in case of exchange loss, this should be the treatment. If we got exchange gain, suppose example, I don't want to discuss all these things as of now. Simply I will discuss. In first year you got exchange loss something. In second year you got exchange gain. In second year if you got exchange gain, then whatever the exchange gain you got, please adjust the exchange loss you already capitalized previously. Whatever the amount you have capitalized, please adjust to this amount out of exchange loss. Suppose example, coming to this example, out of this exchange loss, 2,800 only you have capitalized as per Ind AS 23, not 4,800, correct or not? I'm talking about exchange loss only. Out of exchange loss you have capitalized 2,800 only. So to the extent of this 2,800 only you can reverse it, and we got exchange gain. That is the concept, guys. So see, exchange loss, suppose example 30,000 previously capitalized, now you got exchange gain. Suppose example, now if you got exchange gain 10,000, so please adjust 10,000 to that exchange loss. So please do some adjustments, that's it. Which means asset value will get decreased, correct or not? Yes. So this is the concept. I don't want to discuss more things. Clear? So you can solve these questions, guys. Both questions you can solve easily. Clear? Next, Ind AS 36. A Limited has a machine whose original cost is 45,000. Yes, coming to Ind AS 36, I want to discuss only one thing. What is that? Ind AS 36 means impairment loss. Impairment loss entry, basically impairment loss to asset, correct? So P&L to impairment loss. Yes or no? Yes. Next, what do you mean by impairment loss? Carrying amount of the asset is more than recoverable amount, and the difference will be impairment loss. What should be the carrying amount? Carrying amount means cost minus depreciation. Then you will get the carrying amount. Recoverable amount means fair value less cost to sell or value in use, whichever is higher. Then you will get the recoverable amount. So MCQ very, very important, guys. Very, very important. Value in use means present value of future cash flows. You need to bring all the cash flows to the present value by using a discount rate. Then you will get the value in use. So please calculate. Please apply this rule. Nothing but whichever is higher, then you will get the recoverable amount only. So please reduce from carrying amount. Then the difference will be the impairment loss. Okay. So these are the basic questions, guys. Original cost given, depreciation 15,000, similar asset as recently sold in the locality 25,000, selling expenses 2,000, which means it's the fair value, right? Fair value is 25,000. Selling expenses means cost to sell 2,000. So balance 23,000. Value is how much? Present value of future cash flows of the machine is 28,000. So 23 or 28, whichever is higher, right? 28,000. So here the balance 45,000 minus 15. How much? 30,000. 30,000 minus 28. Balance how much? 2,000 should be the impairment loss. But the question is asking about recoverable amount. So gone. If the MCQ have 2,000, sometimes we will pick the answer 2,000. So the question is asking about recoverable amount only. So what is the recoverable amount here? 28,000 only. Correct? Yes, I don't want to discuss all these things here because we already know about it. Correct? So question number 2 also same, guys. I don't want to waste your time. Next, same carrying amount, fair value cost to sell is 15,000, value is 19,000, whichever is higher. So 19,000. So 25 minus 19, 6,000. Correct? So that is the answer. So same values. Okay. So next, coming to question number 4. This should be somewhat different. Okay, details of the asset is given as follows. Cost of the asset 60 lakhs, useful life 10 years, salvage value 4 lakhs, useful life remaining 3 years, upward revision done in last year by 50%, current value is 12 lakhs, current selling price 11 lakhs, current disposal is 1 lakhs. Impairment loss should be transferred to P&L as per applicable Ind AS would be how much? This is the special question, guys. We will discuss now. Okay. First of all, what is the cost of the asset, guys? Cost of asset 60 lakhs, right? So cost equal to 60 lakhs, life equal to 10 years. Next, sorry. Okay, next, coming to question. Yeah, salvage value 4 lakhs. Salvage value 4 lakhs. Tell me the depreciation. 60 lakhs minus 4 lakhs divided by 10. How much? 60 lakhs divided by 4 lakhs. How much? Okay, so depreciation how much, guys? 5.6 lakhs, right? 5.6 lakhs. So coming to question, they're asking about useful life remaining 3 years. Upward revision is done in last year. Nothing but in 6th year ending, so the upward revaluation has done, right? So please calculate depreciation for 6 years. How much? Into 6. 5.6 into 6, how much? 33.6 is the depreciation. The cost of the asset is 60 lakhs. 60 minus 33.6, balance 26.4 is the carrying amount. Correct? So this will be upward revalued by 50%, which means into 50% under how much? 13.2. So total value, revalued asset, revalued figure of asset, how much? 26.4 minus 26 plus 13.2, how much? 39.6. This is the revised carrying amount. You need to calculate depreciation on this value only. So how many years remaining? 4 years. So 39.6 minus residual value, how much? 4 lakhs. 13.6 minus 4 divided by 4 years. 8.9. Correct? So can you please tell me what is the balance amount? Please tell me what's the balance amount? 39.6 minus 8.9. Balance is 30.7. 30.7. Yes. This is the revised carrying amount. Nothing but after 7 years. After 7 years, the value is 30.7. Coming to question. The current value is 12 lakhs overall. Current selling price means fair value 11 lakhs minus cost to sell is 1 lakh. So how much? 10 lakhs. 12 or 10, whichever is higher. How much? 12 lakhs. So that is the recoverable amount. Carrying amount how much we got? Carrying amount how much? 30.7. Recoverable amount 12. So then the difference 30.7 minus 12. How much? 18.7. 18.7. This is called impairment loss. So general impairment loss will be transferred to P&L, but previously some amount is already recognized in revaluation reserve. So that should be adjusted to this impairment loss amount. How much? Out of 18.7 impairment loss, we need to adjust the revaluation amount. How much revaluation amount we already recognized? How much, guys? 13.2. So please adjust the 13.2. What is the balance? 5.5. This amount only should be transferred to P&L. Correct or not? I already discussed in classes, right? In marathon also I have discussed this point. Okay, so when we are recognizing impairment loss, if there is any revaluation surplus, to the extent of that amount should be adjusted to revaluation reserve, and balance only should be transferred to P&L. This point is already discussed, guys. So very important for examination point of view. So next, coming to Ind AS 38. Okay, coming to Ind AS 38. Yes, you can solve this question. I will tell you the concept, guys. So basically as per Ind AS 38, research expenses should be transferred to P&L. Development expenses should be recognized, should be capitalized, provided 5 conditions should be satisfied. This is already discussed in marathon, right? This is already discussed in marathon. I have discussed the same question also. Same question, guys. So up to the date of before development, what are the expenses you have incurred? During research phase, that should be transferred to P&L. After development phase, what are the expenses you have incurred? That should be capitalized. Okay, in that case, if there is an impairment loss concept also may be arised. Okay, they will, if they give recoverable amount, you can calculate the impairment loss. Okay, if the carrying amount is more than recoverable amount, then the impairment loss will comes into picture. Otherwise it will not arise. Correct? So in that way you can easily calculate. You already done with the marathon, right? Marathon part 1. So then you can easily solve this question. Okay, share based payment deals with Ind AS 102. Okay, so Ind AS 102, I have discussed a lot of questions, guys. So I mean almost 7 questions I have discussed. That is more than enough for our exam. Okay, easily you can calculate any MCQ also. Okay, how many MCQs we have? Oh, only one MCQ. Yes, I will read the question. Easily you can understood this. On 1/4/2022, Oral Limited granted 100 share options to each of its 200 employees. The options will vest in 31st March 2025. How many years? 3 years. Subject to condition that the remaining employees for a period of 3 years. Okay, vesting period is 3 years. On 1/4/2022, the fair value of the share option is 200 and it had increased to 240 by 31st March 2023. On 1/4/2022, the directors estimate that 180 employees would qualify for these options. 31st March 2023, this estimate was 190 employees. Calculate the amount of recognized as an expense for the 22-23. They're asking first year expense, guys. So let me solve this question. Okay, this is very simple, guys. Coming to first year, 31st March 2020. For the first year, okay, see, okay, simple, guys. Sorry. So what is the first year starting? 1/4/2022. So first year ending 31st March 2023. So they're asking expense on this date only. So number of employees is total 200 employees, but at the end of the first year they're estimating only 190 employees. Correct or not? Yes, 190 employees. So 190 employees only. See, on 31st March 2023, number of employees is 190. So number of employees into number of options 100 into, okay, fair value on the granted out only will be recognized because it is an equity, it is not a cash option to remeasure. Okay, so the fair value is 1, how much? 200. Correct? So into 200 into 1 by 3, how much? 190 into 100 into 200 divided by 3, so how much? 12,66,667. correct? 12,66,000. sorry, answer is not A, guys, so please change this. 12,66,667. that's it. Okay, very simple. They're asking first year expense only. Next, coming to Ind AS 108. Yes, reporting segments. So please remember this, guys. MCQ purpose important. In case of assets, 10% limit is very important. Assets are a revenue or a profit, nothing but income. Okay, in case of results, you need to what is the condition, guys? Please tell me what is the condition in case of result. Based on results, 10%. What is that? Please total all profits, please total all losses, take whichever is higher. Out of that amount, apply this 10% limit. Okay, if the segment amount result profit or loss, whatever, please ignore the sign there. Okay, clear? So easily you can calculate this. Total is 10. Segment X 2 crores, Y 3 crores, Z 5 crores. So 10 means 10 into 10%, how much? 1 only. So everything is more than 1. So X, Y, Z are the reportable segment. Same. So this is very important. I think we got this MCQ by last attempt. So less than, if it is less than 75%, then only we need to report the additional segments. Correct or not? Yes. If the total external revenue reported by operating segments constitutes less than NT's revenue, additional operating segments should be identified as reportable segments. That's it. So please remember this. The term CODM identifies a function. Okay, he has to do some operating functions, everything. Okay, an operating segment is a component entity that engages in business activities from which it may earn revenues and incur expenses. And and only. Correct? Yes. So the results MCQ. So I don't want to discuss all these questions because we already discussed in MCQ, I mean marathon session. Right? Ind AS 103 stands for fair value measurement. Okay, Ind AS 113 establish a fair value hierarchy that categorizes into 3 levels of outputs. Correct? Level 1, level 2, level 3. So the theory question is very important, guys. Please go and read that theory question and then come back and answer this. Okay, so please, all these 3 points will be included in there. This is the theory question only. You can study here also. Our quoted price